The Q4 GameStop results are in, and there is some exciting news along with that about the updates to the investment policy to add Bitcoin as a treasury reserve asset. Probably the most exciting thing out of this Q4 earnings result. I'm going to go over just a couple of things that I highlighted in the 10K as I read through it. We'll look at my calculator spreadsheet real quick and how the results came in for GameStop in Q4. Very high level, very briefly. And just so we're all on the same page here, I am a swing trader of GameStop. A lot of people will tell you I hate GameStop. That could not be further from the truth, as you can see from my many purchases at all sorts of price levels on GameStop, including my most recent one, February 5th at $24.85. I don't know why they continually lie to you, tell you that I hate GameStop. I think they just don't want you tuning into a channel where you get real fundamental analysis. I have no problem with people who have different trading styles or different theories about GameStop. I am here to make money, to get the lowest entries I can. I don't always get them perfect, and to sell into run-ups. What I want to do is talk to you guys about how to profitably trade GameStop. What I don't want to do is to sit here for 4 years talking to you about how my GameStop portfolio is flat or in the red. So if you are interested in trading for profits, let's get right into this information. Let's talk about one thing that's really changed with GameStop since that big run-up where we made a lot of money in May of 2024. When we look at the short interest for GameStop back then, it was over 20%. And now, as you can see on the gray area of this chart here, it has trailed all the way down to about 6.7%. And as you guys know, if you follow my channel, when any stock has a short interest under 20%, I am not going to cover it with you as a short squeeze candidate. Why is the short interest so low? Well, number one, the company diluted and added to the float, so the percentage of shares short dropped. But as the company stacked $4.7 billion of cash on the balance sheet, the bankruptcy thesis really just went out the window. It's gone. It's dead. There is no bankruptcy thesis for GameStop, and therefore the shorts are not really interested in GameStop anymore. Moving over to the numbers, I've been telling you guys since November that there were a bunch of store closures coming, so you already know about that. We got confirmation of that today. Of course, a substantial number of stores closing, and the company warning investors that there will be more closures coming in 2025. Probably a good thing to get expenses under control and hopefully get to operational profitability. Net sales for Q4 came in just under 1.3 billion, a little bit lower than even I expected. For the quarter, that gave GameStop 79.8 million in operating earnings. We add an additional 54.8 million of interest income. Net income for the quarter, $131 million, a pretty solid quarter despite that low revenue. When we look at the full year, 3.8 billion total sales, still an operating loss. I know there's been people telling y'all for the entire year that GameStop was operationally profitable. I've been trying to let you guys know that that is misinformation. All you got to do is look at the 10Qs every quarter and you can see the operating losses. And here we have a reminder again in the 10K, operating loss for the year of $26.2 million, despite that healthy net income on Q4. Still an operational loss for the year. So still work to be done on the operations side. But the good news is, with all of that cash on the balance sheet for the entire year, the interest income overcame those losses from operations. $163 million of interest income for the year, giving the company a positive net income result for the year, thanks to that interest of $131 million. In terms of looking at the spreadsheet and analyzing a couple of the fundamental numbers and doing some valuation analysis on GameStop, I just want to compare 2023 to 2024. So let's hide these columns and see really what changed. The number of locations went down from 4169 to 3203, 23% decrease in locations. The revenue growth rate was a 27.5% decrease. Gross margins here improved from 2023 to 2024 from 24.5% to 29%. That is good news. SG&A as a percentage of sales. Don't look at the dollar amount. Look at SG&A as a percentage of sales. It went up. And that is not what we want to see. It went up from last year, 25% to almost 29.5% in 2024. Good job cutting SG&A as they cut stores, but as a percentage of sales for the year, it still soaked up a lot of that revenue. And they need to do more work to get SG&A as a percentage of sales down in 2025. Operating loss in 2023 was $29 million. The operating loss in 2024 improved by almost $4 million bucks. Negative $26 million operating income in 2024. The big change, obviously, was the money that the company raised through dilution in 2024, putting all that cash on the balance sheet and the ability to generate interest income from that. Net income going up from 2023 from $6.7 million to $131 million thanks to that interest income. GameStop has run up in after hours to $27.50, probably based on excitement about that Bitcoin news. Hopefully that continues for everyone this week. I don't know if it will, but I do want to talk about valuation of the share price versus the numbers that we have now for the full year 2024. And when I talk to you guys about how to value a stock, I don't use things like liquidity ratios or solvency ratios, which show the financial health of the company. There are a lot of people distracting you, talking to you about things like current ratio, which is a liquidity measure. It has nothing to do with the valuation of the share price. We want to focus on things like here on stockanalysis.com called the valuation ratios. So I have prepared for you guys just a comparison of some of these financial valuation ratios and financial efficiency ratios, comparing GameStop to a direct competitor, a competitor that they call out in the 10K, Best Buy. You could pick another one like Walmart or Target that they also mention in the 10K. And I'm not going to distract you or mislead you saying that GameStop should be valued relative to something like NVIDIA. That is preposterous. You compare companies' valuations to other companies in their sector, brick and mortar specialty retail. And the facts are right now GameStop is just overvalued based on current information, 2024 results. Some of these valuation ratios for GameStop, like the PE ratio, the EV to EBITDA, the price to free cash flow, the price to sales even, all way too high, meaning that there will be some tendency or pressure from shorts to try and push the price down relative to GameStop's peers. Whether they will be successful at that or whether they'll even have the interest in doing it, knowing that GameStop is now seriously looking at Bitcoin, I don't know. But the tendency is they're going to look at GameStop's price based on these valuation ratios and say that it is overvalued relative to its peers. And if you know how to do proper valuation analysis and comparison, there's not really any arguing with any of these numbers. The only way people can argue with them is to misdirect you into not looking at these and instead look at something like the current ratio, which again is a liquidity ratio. It has nothing to do with share price valuation. Now that we've got the tough talk out of the way, if you stuck around, let's talk about the fun stuff from this 10K. GameStop announced an update to its investment policy to add Bitcoin as a treasury reserve asset. Now, this is an important announcement so that if you stay invested in GameStop now, you have official notice that the company is going to be investing in Bitcoin. They have not previously invested in Bitcoin because you weren't buying a Bitcoin company. You were buying a brick and mortar retail company focusing on gaming and collectibles. And people could get upset if the company had invested a bunch of money in Bitcoin and lost it. But now you have your direct warning from the company that they are going to be pursuing Bitcoin as a strategy for better or worse, depending on timing of when they get in and what happens with Bitcoin. They are letting you know that they are now primarily a company that is going to use their cash and other sources of liquidity to maximize shareholder value, including through potential investment and acquisition opportunities. That was not there before as the primary objective of the company. Now, number 2 priority is optimizing our retail business to achieve profitability. This is a game changer. This was not there before. Whereas last year, they had told investors that their strategic plan was to optimize the core business and achieve profitability. Now we have a different primary objective. Use the cash on hand to deliver shareholder value. And number 2 priority now is optimizing the retail business to achieve profitability. And later on in the 10K, they talk about continued efforts in 2025 to close more stores. There will be more closures this year. This retail side of the business is no longer the primary focus of the business. And here is your notice about that. That's not a bad thing. If they can deliver value through properly investing that money, the retail side of the business is tough. That's why they're closing it. That's why they can't make an operational profit. But they have a bank of money now, and maybe they can do something with it. And I'm excited to see if they are able to make that happen. While we are waiting for that to happen, we still need to, we that actually do real fundamental analysis need to think about the valuation of the company based on the full year 2024 results, expectations for 2025, and that cash on the balance sheet, all relative to the $27.50 price that is out there in after hours right now. And I've added in here to this screen the book value per share currently of GameStop with the updated results is just over $11 per share if the company were liquidated. That is the only thing that you need to know about book value. You don't do a valuation on the market of the share price based off of the book value. The book value is something we think of as a fallback. If the company needed to be liquidated, what's the most you could get out of it? $11. Cash is not worth more than the cash, except to the extent that it provides earnings. The earnings off of that money invested in treasuries and money market funds is just not enough to justify a $27.50 price. It's not. It's not a proper valuation. GameStop is a play about people excited about the potential, excited about the future. And that is fine if that defines you, as long as you understand how Wall Street is valuing the stock so that you can manage your risk and have the right expectations about what might happen with the price. Any sort of good news, any sort of FOMO type event could make GameStop price move up. Excitement makes price move up because it increases demand. But if there is no excitement, if the FOMO slows down, if Roaring Kitty doesn't come back, Wall Street is going to be looking at what I have on the screen here, including the book value and the lack of earnings relative to the current share price. And they are going to want to try and push it down. So all I'm saying is it's okay to be excited. I have high expectations and big hopes that Ryan Cohen can invest this money and find a vehicle to drive shareholder value, maybe even higher than tonight's share price. But until then, I know that the machine of Wall Street is going to be applying pressure the other direction relative to everything we have on the screen right here. That is the foundation that I use in analyzing when is a good time for me to buy GameStop and when is not a good time to buy GameStop. I am not going to be that guy to tell you buy GameStop every single day at any price. I am going to continue to be that guy that tells you, just like I am trading it, wait for the opportunities when the price is cheap so that you're not overpaying for the stock and you can maximize profits on any run up. Understand how the stock is valued, and all of these things start making sense. And stop listening to the people who cannot explain a proper valuation using valuation ratios, using financial efficiency ratios. If they're talking to you about current ratio and book value, they are obfuscating on purpose, hiding from you the actual way to value GameStop, the proper way to value GameStop. And I don't want to see that done to you guys. In a future video, maybe we'll get into the calculator expectations for 2025 GameStop results. I've already got the entire year mapped into the calculator. I can tell you exactly what GameStop is likely to report for the year of 2025. Yes, I'm making a couple of assumptions, but the model has already predicted 2025. And what I can tell you is, based on what I'm seeing from the brick and mortar stores for 2025, my hopes for GameStop are pinned on management doing something with that cash on the balance sheet. That is the holy grail. That is the exit plan for GameStop. That is the way to maximize your share price out there in the market. The brick and mortar way is not going to cut it. So I hope they have a plan, and I hope we hear about a plan sometime this year. I'm not putting any pressure on you, Ryan. Do things on your own timing. Do it when it is smart. You've stopped the bleeding. That's fine. I hope people don't run out of patience. But when you find the right deal, Ryan, let us know. And I'm sure you will. Guys, thank you for watching all the way through. I am Tony Denaro. I will see you on the next video.